Good morning, everyone, and thank you for joining me today. I'm excited to introduce our topic, why this news case is a must-learn. We'll explore how understanding complaint patterns can reveal systemic issues in customer relationship management, digital transformation, and regulatory compliance. This knowledge is essential for students, faculty, and industry stakeholders who are navigating India's rapidly evolving banking landscape. Today's presentation will cover the significance of rising customer complaints against private banks, what they tell us about service quality and governance, and why this case is a vital study for future managers in banking and finance. So, let's get started and dive into why this case matters so much. This slide highlights a significant shift in how customers are trusting and interacting with India's banking industry, based on the latest RBI Ombudsman data for FY25. We're seeing a more stable customer base overall, which is a positive sign. At the same time, the declining complaint ratio indicates that there's a relative improvement in customer satisfaction and service quality. In fact, complaints now make up about 34.8% of the total, showing that while issues still exist, they are becoming more manageable. Focusing on public sector banks, digital channels have seen the most surge in complaints, which makes sense given the increasing shift towards online banking. This category also experienced the highest rise across all major categories of complaints. Public sector banks hold a 37.5% share of total customer complaints, highlighting areas where digital engagement needs close attention. Turning to private banks, these dynamics are crucial because understanding the complaint crisis, those key numbers, helps us address customer concerns more effectively. Overall, these trends underscore the importance of adapting to changing customer expectations and improving digital experiences across the industry. Let's take a closer look at where systems are breaking down across different banking channels. Starting with ATMs, common issues include cash not being dispensed, which can be quite frustrating for customers. Card retention is another problem, when cards get stuck or retained by the machine without any clear reason. Network failures also play a big role, causing transaction halts and inconvenience. Moving on to digital transfers, failed transfers and stuck payments are frequent pain points. These issues often lead to delayed refunds, creating distrust and dissatisfaction among users. Then we have UPI problems, like unauthorized charges, which raise serious security concerns. Declined transactions and billing errors also undermine user confidence and smooth functionality. In the realm of credit and debit cards, disputes often arise from transaction errors, double charges, incorrect amounts, or unrecognized transactions. App crashes and service disruptions further exacerbate the problem, making it difficult for customers to resolve issues quickly. Finally, mobile and e-banking failures are where the entire system seems to break down at times. These failures can stem from various technical glitches, affecting everything from login issues to complete service outages. All these points highlight how critical it is for us to understand where and why these failures happen, so we can develop better solutions and improve overall customer experience. This slide highlights a crucial issue that has emerged recently, a significant rise in grievances with the RBI. This increase signals that there are systemic operational gaps within India's most tech-forward banks. Despite their technological advancements, these banks are facing real challenges in delivering consistent, reliable service. We see that undertrained teams and inadequate customer support are major contributors. When staff aren't fully prepared or equipped, response issues arise, like delayed responses or complaints that remain unresolved. This poor grievance redressal process can really erode customer trust. Additionally, we're noticing an uptick in digital payment errors and transaction failures. Even though these banks position themselves as digital leaders and offer premium services, they're struggling to ensure service reliability. This disconnect between their digital promise and actual service performance is a key concern. It underscores the importance of addressing these operational issues to truly meet customer expectations and uphold the reputation of India's leading banks. Let's delve into some of the root causes behind the rising number of complaints. First, when speed becomes the priority over service quality, customer trust begins to erode. Customers expect not just quick responses, but meaningful, reliable service. Unfortunately, weak grievance redressal mechanisms often fail to address their concerns effectively, leading to frustration and distrust. Delayed resolutions further compound this issue, making customers feel unheard and undervalued. At the same time, aggressive cross-selling of financial products often results in mis-selling disputes, which damage the relationship and harm the bank's reputation. This tendency to push products aggressively can be seen as part of a broader push-selling culture, where growth targets overshadow the importance of quality control and compliance. When expansion takes precedence over governance, risks inevitably increase. Moreover, frontline employees are often undertrained. They lack the proper product knowledge and problem-solving skills needed to serve customers effectively. This gap leaves customers feeling unsupported. Finally, rapid digitalization efforts, such as quick tech rollouts, are sometimes implemented without adequate back-end support systems. This disconnect can lead to system failures or subpar user experiences, further fueling customer dissatisfaction. All these factors combined contribute to the rise in complaints, emphasizing the need for a balanced approach that prioritizes both growth and quality service. Now let's look at some recent developments. We've seen a shift towards less aggressive product pushing, which is actually a positive sign of more responsible sales practices. As a result, our complaint ratio has fallen, indicating that customers are feeling more satisfied and that we're improving in handling their concerns. This also points to more stable customer relationships, which is crucial for long-term success. Interestingly, though, the slower pace of digital adoption suggests that customers are taking their time to fully embrace new technologies, perhaps preferring a more measured approach. Focusing on public sector banks, we notice that their premium positioning often creates higher customer expectations. When they do cross-sell aggressively, it can sometimes lead to disputes, especially when operational errors occur or when customers have lower tolerance for mistakes. Additionally, with a higher volume of digital customers, there's naturally more complaints. It's an expected part of scaling digital services. On the other hand, private banks tend to operate differently. When comparing private versus public banks, there are clear distinctions in their approach and customer expectations. Private banks often focus on personalized service, which influences how complaints are managed and how expectations are set. Understanding these differences helps us tailor our strategies effectively and ensures we're meeting the unique needs of each segment, all while aligning with our overall goal of improving customer experience. Let's talk about how increasing complaints reveal some important issues in our banking system. These rising numbers point to systemic gaps in customer service, meaning that banks may not be providing the level of support customers expect. They also highlight weaknesses in compliance systems, which are supposed to ensure banks follow the rules. Additionally, the stress on grievance redressal mechanisms shows that the current processes for resolving customer issues might be overwhelmed or inefficient. This is where the RBI Ombudsman plays a crucial role. It provides an accessible redressal mechanism for banking disputes, giving customers a straightforward way to seek resolution when internal banks fail to address their concerns. Protecting consumer rights is at the core of this system, ensuring that customers are not left powerless. The Ombudsman also monitors bank behavior and enforces regulatory standards, making sure banks adhere to fair practices. When banks don't resolve complaints internally, the Ombudsman steps in to handle unresolved issues, providing an important safety net. Understanding this role is key, because it demonstrates how the RBI works to maintain trust and fairness in our banking system. It's all about ensuring that the system remains fair, transparent, and responsive to customers' needs. Let's talk about some critical areas banks need to focus on to improve their customer care resolution systems. First, IT infrastructure upgrades are essential. Modern, robust systems help us handle customer issues more efficiently and accurately. Alongside that, staff training programs are vital. They ensure our teams are equipped to deliver excellent service and resolve problems swiftly. Now, it's important to recognize that these investments come with significant costs. Operational costs tend to increase as we upgrade systems and train staff, but these are necessary expenses to meet the rising expectations of our customers. Additionally, complaint turnaround times must be reduced because today's customers expect quick and effective solutions. Digital reliability standards are also becoming more stringent. Customers rely heavily on digital channels, so ensuring these platforms are stable and trustworthy is crucial. We also need to be vigilant about practices like mis-selling, which can severely damage trust and reputation. The Reserve Bank of India may tighten norms further, which will increase compliance pressures on banks. This means more resources and effort need to be dedicated to staying compliant with evolving regulations. Another critical point is the rising cost of customer acquisition. As norms tighten and competition intensifies, attracting new customers becomes more expensive. And in the digital age, negative word of mouth spreads rapidly. What customers share online can quickly impact our reputation. In banking, trust isn't just important, it's survival. Losing customer trust can lead to reputation damage, which is incredibly hard to recover from. It also has a strategic impact on our operations, influencing everything from customer retention to overall brand strength. So, in summary, these interconnected factors highlight why investing in customer care and compliance isn't just about avoiding penalties. It's about safeguarding our reputation, ensuring operational resilience, and ultimately, securing our place in a competitive landscape. Let's focus on the final key lesson here. It's important to remember that service excellence is not just a back-office task. It truly requires commitment from the C-suite. When leadership is actively involved, it signals that delivering exceptional service is a top priority across the organization. Service isn't just about processes. It's a leadership function that sets the tone from the top. This commitment drives the entire organization toward continuous improvement and innovation. Now, moving on to complaints, often seen as negatives, but in reality, they are opportunities. They give us valuable insights into what can be improved, and those insights can lead to innovation and better products. The data we gather from grievances can be a goldmine for enhancing product quality and customer satisfaction. It's about turning challenges into opportunities for growth. Next, remember that intangible factors like reputation are crucial. They drive long-term profitability. A strong reputation built on trust and service quality can differentiate your bank in a competitive market. Customer trust, in fact, is the real asset of any bank. It's what keeps clients loyal and attracts new business. Building and maintaining that trust should be our ultimate goal. And let's not forget governance. Strong governance creates trust and sets you apart from competitors. Compliance, often seen as burdensome, actually becomes a competitive advantage when integrated properly. Moving to technology, it should enhance the customer journey, not complicate it. Digital transformation is essential, but it's incomplete without a focus on the customer experience. Ultimately, these lessons tie back to the overall theme. Success in banking depends on leadership, innovation, trust, and a customer-centric approach. Now, let's look at the next steps we should consider. First, we need to analyze complaint data trends to identify recurring issues and patterns. This will help us understand where banks are struggling the most. Second, studying international best practices can offer valuable insights into effective customer grievance management. Based on these insights, we can propose actionable solutions tailored to Indian banking institutions. Moving forward, a key question is, how can MBAs contribute to building truly customer-centric banking operations in this digital age? It's about fostering a mindset focused on customer needs and leveraging innovative strategies to enhance service. We also need to consider future leadership. Specifically, whether premium banking is setting unrealistic customer expectations that lead to more complaints. Managing these expectations effectively is crucial. Next, expectation management becomes vital. How can banks redesign their digital grievance systems to ensure faster, more effective resolutions? Streamlining processes and making systems more user-friendly can significantly improve customer satisfaction. Another important point is whether the RBI should impose stricter financial penalties for repeated grievance failures. Tougher regulatory measures could incentivize banks to prioritize better complaint handling. Then we have the paradox of technology. Why are private banks receiving more complaints despite having better technological infrastructure? Understanding this disconnect can help us identify underlying issues beyond just technology. Finally, these discussion questions are meant to provoke thought and dialogue. They tie everything together, encouraging us to think critically about how we can improve the overall customer experience in Indian banking.